Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about M's and W's, which is one of the most simplest trading strategies you can ever find. But before we do so, we have an indicator called BTMM Pro, which is basically an indicator made with the market maker concepts. So it basically show you where to buy and where to sell right on the charts and send these signals directly to your phone. This is going for $75 per month. We are currently in a buy on odd CHF, which was issued yesterday. And then we are also long on NZD card, which was also issued yesterday. If you want to have your copy, use the link that I've left in the description box below. All right, so basically back to our video. How do we trade M's and W's? M's are thrown each and everywhere on the charts, and most of them are trap patterns. By trap patterns, we mean they actually induce you to go to the long side or to the short side, but later to see that they intended to go against that particular direction. So the first thing is always to find what we call a peak formation high or a peak formation low. How do we obtain that particular point? The first way is to count levels, which is very difficult for several traders. But in this particular instance, I'm going to show you an easy way to do so. So we have this on our main chart, and on our sub chart we have the traders dynamic index, which is basically a free indicator I can provide you for free. So on the traders dynamic index, what you only do is to look for shark fin points on the H4 time frame. That is the easiest way to obtain what we call peak formation highs or peak formation lows. So obtaining these peak formations will give you a market bias for the next couple of days, and in those next couple of days we will be trading what we call the safety entry. The safety entry is basically an MOW in line with that particular market maker trend. However, there are types of setups that you need to look when you are now about to trade those particular ways. So let's now have some examples and you will be able to understand. This is USD against JPY, and the first thing that we've said is to obtain the peak formation highs and peak formation lows. So I'm just going to pick randomly the peak formations that I see on the traders dynamic index. So in this case, we can see that on the traders dynamic index we had this particular point and this particular point and this particular point, this particular point. All of those were basically peak formations. So let's actually pick at least two which we can use. So this one is corresponding to this particular point in structure, and this one is corresponding to this particular point in structure. So peak formation high, peak formation low, and another peak formation high at this particular point corresponding to this shark fin on the traders dynamic index of the H4 time frame. So within these particular points, we can now check and see where we were going to make an entry. We've said first step is to locate a peak using the traders dynamic index. Then the second step is now to wait for the pattern. Let's now see how it goes when we are actually locating the pattern, right, away from the peak. Always try to trade away from the peak. So the points that I've marked on the H4 time frame, you can see this is the point that I've marked on the H4 using the traders dynamic index. The next step is to now say, is this peak logged? The peak log can be seen with a 50 EMA and a 200 EMA crossover, like what happened here. Then after that, we now need to see a pattern. And this pattern can come in different forms. Sometimes it comes as M and W's, sometimes they can come as what we call head and shoulder structures. So in this case, we can see a shoulder, a head, and another shoulder. This is actually a tradable point where we can trade on the second shoulder, or basically it might be the second leg, as we will see just shortly. So the market went our direction away from that particular peak, and we can hold that particular trade for two more levels, since this will be the initiation of level 2. So level 2 and level 3 to the downside up until we reached this particular peak that we have marked on the H4 time frame. The next thing is now to see this peak lock. On the following day, we did not see any lock, meaning that there was still probability to see the market come back below this particular point and then take off. So it logged on this particular day where 50 crossed 200 at this particular point, and the next thing is now to wait for a pattern, either a W pattern, either an inverted head and shoulders pattern. Anything will do. We can see that on this particular day we had first leg, second leg at the first leg level, and if we look at the traders dynamic index, we can see some divergence, or basically rise of the relative strength. First leg outside the bands, second leg inside the bands, like that. And then the market went to the upside, going to the upside like that, and level 2, level 3, and then we are done. Let's check another point. In this case, we can see that this is a peak formation high that we have marked on the H4 time frame. But unfortunately, although the peak logged, there was no pattern on the following day, but a pattern was later introduced on this particular day. You can see first leg, second leg, and on the second leg, that is where we could make our entry. However, if we look closely, we can see that at this particular point we had level 1, level 2, and then at level 3, that is where we had our pattern. Therefore, we must not expect to hold this for more than one level, meaning that only the third level was going to be our valid point to hold that trade, because there was actually another peak formation low, then peak reset, and we start again. From peak reset, it locked here, an M pattern issued, and the market went to the downside like that. So basically, that is how you trade using the peak formations and the W and M patterns. On that note, we've come to the end of our today's video. Thank you for watching, and check out our BTMM Pro.